Welcome all my fellow traders. Thank you to all my regular subscribers and of course anyone new locking in. This is my Sunday forecast video, so keep it tuned right here if you want to see some predictions on where the S&P and the Nasdaq might go this week, what we can look for in terms of clues in the chart, in the dollar and the VIX, and anything else that might help us understand where price action is balanced and where we might be overextended and be looking for that pullback inside. And as always, I'm going to do this with technical analysis, so let's dive into the charts right now. As always then, we are going to do a top-down review starting on the weekly chart on the S&P E Mini. And as you can see here, yet again, we have printed another bullish weekly chart. So the trend continues to be upwards ever since that October level, and it was an extremely bullish week. We had one pullback in, which held, and we pushed higher. So you can see a nice long wick on the bottom showing where the bulls stepped in and applied buying pressure, and on the top there is a small wick which represents the rejection we had on Friday as we started to pull back into the range created earlier in the week. So from a weekly point of view, as ever, we are extremely bullish. Now, if you go back to my previous videos, you will note the anchored VWAPs. They are still trending upwards. So let's put those on the charts right now. And here they are then. So from a weekly point of view, you will notice this bottom anchored VWAP from that October low has been holding the trend the whole way. And from the most recent October low, there is another anchor, which as expected, and we talked about, is trading up towards this key pivot point on the weekly. Why is it a key pivot point? It was the old all-time high. So once we broke over above that, this anchor has now trended up to that point, and I can set a new anchor from the pullback on that point, which is holding price. It's exactly where we dipped into this week before holding price action and moving to the upside. So the anchors are still set in place. Now, as a long-term buyer, this is still my key area of interest where I would like to see price come back to and retest. But the only way it is going to do that is if it gives a bearish change on a lower time frame. Until that point, very clearly from a weekly standpoint, we are still bullish. Moving down into a daily chart now. On a daily chart then, we can have a more detailed look. On Thursday, we had a huge expansive move, and the reason for that was all to do with the Bollinger Band mean reversion hold play. If you haven't watched the video on how to use Bollinger Bands, I'm going to stick it up here in the corner now. Watch that video. It will teach you my tricks and tips for higher time frame Bollinger Bands. If I put them on the chart right now, you will see that we rejected the top Bollinger Band, retesting the 20 SMA for a mean reversion. We did it a second time, building out a flag and building the liquidity on the daily chart for this expansive move on Thursday, which has come all the way back up to the top of the Bollinger. It was to be expected all the time. Price was holding this 20 SMA and we didn't get the cross of the 5-day. So the weekly, the 5-day SMA is trending above the monthly, the 20 SMA. So again, from a daily standpoint, we are bullish. That being said, there is quite clearly a pin high here on Friday as we got a retracement lower. You must note, most of this huge expansive move was all to do with tech and more specifically Nvidia. Okay, so we had some profit taking before the Nvidia earnings. Once the Nvidia earnings hit, we did this huge run higher. So it is possible that this is an excess high. So there is most definitely some supply up here in the top of this range. So we have to keep our eye on some very, very key levels. From a daily point of view, right here, this is your retest. If we're going to remain bullish, you would want to see price to come back in here, make a higher low on the daily and continue higher. We have left a lot of stops down here. So I have got my eyes on these right now to see if price really wants to come and take buys out the market first. It is not until we get down to a 4-hour and an hourly time frame where you can really start to see what's going on. So let's get into that right now. now. So as you will see, on Friday, we did the huge expansive move up before pulling back into this 4-hour block. We held the levels before expanding back up, putting in a double top, confirming that there is some supply up here and trending down. Now, there are a ton of stops down here, okay? All the sell side liquidity is down here. All the buyers who are in the market from a late price of 50, 90, let's call it, and above, their stops are right beneath here, because you can see 1, 2, 3, 4 times their stops have just been left here untouched. So it is probable that the market will want to take them out. Even if it is to be bullish, there is a good chance we will stop run everyone in here first. So I'm interested to see how the market reacts once we do that stop run. And I'm going to show you what I mean now on an hourly chart. On the hourly chart, you will see even clearer all the stops down here. So there's a couple of things we might get. We can get a failed look below, where price comes back inside, uses the liquidity to come back up and test the supply at the highs. Very, very capable of doing that. It's a move the market has liked to do over and over again. But you have to remember we are at all-time highs. So it is equally as conceivable that we have left excess high up here and that this is all strong supply. So it is possible, and you need to be aware of, if the market looks below, rejects, we might come down to some confirmed levels of support. So my first area I would be looking at, if it wants to do this move, was the old breakout level. Now, if we confirm this level here, if buyers step in, you need to be very careful on the short, because you need to be covering into this. This is still counter trend on a weekly and a daily, all right? You have to remember what time frame you are looking at. Try and line up multiple time frames. If this then confirms a further rejection and starts to get heavy, it's quite clear that we can come all the way down here, and there is a ton of liquidity. Not just this one I marked here, there is quite clearly also a ton of stops under this level right here. All right, so these are my dollar signs. These are what I'm going to be looking at if price shows a willingness to move lower. Now, again, you have to think about the higher time frame levels. As you can see, this is a weekly anchored VWAP trending up. All right, so you need to be aware of these. What I would say, this would be quite an easy play for the market to get heavy and retest. This is not going to happen in a day. This is going to have to take a number of days or weeks to happen if we're really going to come back down into these key levels to retest. So these are some of the things I'm thinking about. Is the market going to rotate lower after some profit taking down to these levels? Can I get short for this counter trend, high time frame rotation down, and then wait to see where we get some levels of demand step up? Or in fact, is the market just going to do a sweep like we talked about first and pump higher? So how can we draw some thesis for this? Well, the first thing I want to look at is the NQ, because it's tech that has been driving this whole move. And the daily chart on the NQ makes it clear. I talked about it on Twitter. I talked about it to my room. There was a quite clear target here. This red line was the all-time highs. Everyone who was swing short had their stop above or at the all-time highs. So the market's job was to take them out the market and then do a mean reversion back down and inside, which is exactly what we got. So from a daily point of view, you have to also understand we have a huge imbalance right here from Thursday's push. And while we are creating higher highs and higher lows, there is also a chance to pull back much, much deeper if the objective was simply just to take out these all-time highs. Quite clearly, 18,000 is a key level. It has lots of room to dump back down, and you have this gap still to be filled, which was the gap up between Wednesday and Thursday. This is the same on ES. There are a lot of gaps on the SPY right now to the upside where we're gap and go, gap and go, gap and go, over and over again, and at some point these gaps are going to get filled, so you have to be aware if we're going to get the shift. I'm not suggesting that this week is the time where we're going to move much lower. I'm just saying if the objective was the all-time high on the NQ, if we're going to start rotating and going risk off on tech, then the NQ is going to get weak first, and you can follow that trend on the ES just to the higher time frame levels of demand for now, and then wait and see what we want to do. Zooming out on the NQ, there is a ton of liquidity being built. So if this is truly going to be a head here, we can give it plenty of time to come down and build out a pattern here to then potentially move lower with a right shoulder. There is absolutely no rush to short the NQ or the ES. Let it build out the liquidity, let it prove to you it wants to move lower before you start taking any of these longer term short positions. A quick look at the dollar then, and you'll see I have not updated any of my drawings from last week because they are all still relevant. So we had that inverse head and shoulders on the dollar. We came and rebalanced this area right here, which I've talked about for the last 2 weeks. Job done from that point of view, but we are still making higher highs and higher lows going into this week until we got to Thursday and Friday. Now, this is where it gets interesting. This old level of demand here on the right shoulder on the inverse, we had it drawn out, we dipped into it on Thursday and it held, and we drove back up inside to this old key level. So you have got to be cautious right now. We do not know here on the dollar what it wants to do. It can build this microstructure here and use this to dig down and go lower. If the dollar does that, the market is going to go risk on and we are going to pump much, much higher on the NQ and the ES. But, and there is a but, if we are simply building a flag here, all right, and we start to break above and grind and get above this key area and get above 105, we still have all these levels of supply to come and retest. And this will time absolutely perfect with the market rolling over. So I have got one eye on the dollar on the higher time frame at all times right now. Simply put, we have done the inverse head and shoulder, we broke out of the neckline, and we are coming back to do a retest. So it's not crystal clear right now what the DXY wants to do. Last thing I'm going to look at is the VIX. And just like the DXY, I am not going to change any of these levels. You can see quite clearly from the end of last year and all this year, we are still in this giant channel and it refuses to break out and close above. And we are just ranging between, which is why there is so much volatility in this market right now. It is without a doubt a trader's market. You can play this market both ways if you understand your key levels and you just follow the rotation. So if it's not been clear enough, this down here is near all-time lows, all right? All the time the VIX is down here and all the time the VIX is stable, the market has a chance to continue higher. But as we get through these red levels here, these levels of supply, and we're chomping through, it has got a chance to break out and come and reprice all of these imbalances and attack the supply up above it. Today, it is yet to do that. We had this huge move here, which just got rejected in front of 18 and thumped right back down. So right now on the VIX, given where it is, you cannot be looking for the short on the market, all right? You need to time the short on the market. You need to wait for the market to give a change of character. Wait for the multi-time frames to line up and tell you it wants to go lower. And when that happens, you will see the VIX up here. And when the VIX is up here and starting to move up, you can think about that short on the market. But until then, all the signs is that the market is bullish. It might look for a pullback to find some buyers and it might be underneath the stops we talked about, but you cannot be picking tops in this market. The whole reason the market has moved up this high is because traders refuse to acknowledge that we are in a bull market and they keep picking tops, shorting the top and getting squeezed out over and over again. We had it into the earnings on Nvidia, Wednesday's close. Everyone was short on the market. We went risk off, and the last 20 minutes of that Wednesday close, we absolutely ripped. And then after Wednesday close and after hours, Nvidia posted incredible earnings, and Nvidia and SMCI pumped. The Mag 7 pumped on Thursday the next day, and Friday we had a little profit taking. Nothing more than that. That's what we're looking at this week. Very, very simple. Pullbacks into demand, we will take long. Failures and rejection underneath, coming back inside, we will look for the counter trend shorts. We will not be thinking long-term shorts until anything lines up. I hope this video has helped you. If you are brand new to trading, you can do my beginner's guide to trading. I'm going to post the link right up here above. Hope you enjoy it. If you do, don't forget you can do my course right now. Over 20 hours of education consultation. The link is in the description. Code YouTube will get you 20% off at checkout. Have a fantastic week. Good luck. Trade safe. Watch your size. Use hard stops.